Welcome back, students who are taking financial accounting and doing the graded project 061579. This is additional instructions and it's part 4. So we're going to pick up where we left off, which was on page 37, 3 and 4. Okay. Now we're on page 37, number 5. So it says here, create an unadjusted trial balance. Okay. Now, again, you're going to use a blank form, and if you're going to use one of the forms, and you can print them out. But if you want to use blank paper, that's fine, just so long as you have the formatting correct, meaning you're going to have on your trial balance, you're going to have a heading, and your heading should be the title, the name of the company, what the name of the form is, and the appropriate date. Okay. On trial balances, it's the date that the trial balance is being created. It's the balances in the account on that specific date. You can create trial balances anytime you want. You can create one on January 17th, you can create one on January 23rd, and create one on January 26th. And they're all going to be different because obviously additional transactions have been added. Okay, so it's when you date that particular trial balance, it reflects the balance in the account as of that particular date. Now, here we're creating an unadjusted trial balance. Okay, and remember, the trial balance is nothing more than a list of the accounts, list of the general ledger accounts, and the balances in those accounts. Okay, but we're going to call this one unadjusted. All right, and the reason why it's an unadjusted one is because what did we do so far? One, we had beginning balances, from the post-closing trial balances from the previous period, and then we had transactions, which we journalized and posted into the general ledger accounts, and we did that all the way to the end of the accounting period. Okay, so now at the end of the accounting period, all of our general ledger accounts have balances in them. No, I should spell right. I should spell balances correct here. Balances in them, okay? But we don't know if those balances are correct or not. Maybe a mistake was made. There's also adjusting journal entries for accounts that are affected, but nothing was there to trigger the posting of those journal entries. Entries for like depreciation or prepaids have to be made, and there's nothing that triggers those entries. So at the end of the accounting period, we know we have to make these additional entries. So when we get to the end of the accounting period, we have this unadjusted trial balance, and that's done before we make the adjustments. So now we create this trial balance by putting in a heading, and in this column here we have our account numbers. Okay, and of course these are the account names, right? Cash, vehicle, whatever. And we're going to have our debit or our credit, the balance in that particular account, which is what I alluded to in the previous video. Okay, at the end of the video, here I have two different accounts. Well, my balance for my vehicle account is 105,000, and for my loan payable, boy, I didn't spell payable right either. Okay, is 30,000. So when I create my unadjusted trial balance, my vehicle balance would have been a debit of 105,000. Okay, my cash I had used as an example of 75,000, and loan payable I had a balance of 30,000. So that once I have the list of all the general ledger accounts and their balances, okay, I underline and I show the balance, and that because that's just doing the math down that column and doing the math down this column is 105,000, and I double underline these numbers. A double underline means that that is the end of a mathematical calculation. A single underline means that a calculation is being performed, and that's why when you're formatting your financial statements, it's important to have your underlines and your double underlines in the correct places. Because if I had just put a single underline under this balance, all right, and this would be a total over here, okay? If I'd put a single underline underneath this balance, anyone, based upon generally accepted accounting principles, anyone who's looking at this balance and seeing one underline would start thinking, well, does that mean this is a subtotal because I'm going to have another calculation because there's only a single underline? They're not sure. But if you make a double underline, that tells them, oh, that is the final balance. There's no more math to be done to this particular number, so that this is truly the total, right? So in this step number 5, we're going to create this unadjusted trial balance. And when we have it, okay, we're going to move into the adjusting process. Now, on page 39, step number 6, it says journalize the following adjusting journal entries. And before I get into that, and I'm just going to scribble at the bottom of this and then erase it, okay? Where are we in our process so far? We started out with beginning balances, okay? Then we journalized transactions. We posted the journal entries into our general ledger accounts, and from our general ledger accounts, we created a trial balance, okay? Now, that beginning balance was the first day of the accounting period, which would be the 31st. I'm sorry, which would have been the first, right? And throughout this process, that would take us all the way to the end of the accounting period, which would be the 31st, right? January 31st. So what are we looking at? We're looking at making journal. We started with beginning balances, but we made journal entries. We posted to the general ledger accounts, and then we created a trial balance. Now, the reason why I brought all of this up is because this here is a repetitive cycle, okay? We do this during the accounting period, but we do the exact same thing when we have to make adjusting journal entries. ING, when we have to make adjusting journal entries. And we also do the same thing when we have to make our closing entries. Closing entries. Okay. We're going to make the journal entries. We're going to post them into the ledger accounts, and then we're going to create a trial balance. And depending upon where we're at in the process, we're going to name our trial balance differently. Okay. So in the previous step here, we had just taken all of our normal journal entries, that the transactions that occurred during the operation of the business, and we created an unadjusted trial balance, which means that we don't know if these numbers are absolutely correct. We have to look at them to see if we've made any mistakes, or we have to make additional entries in order to make sure that the balances in the accounts are what we want in those accounts, right? So now, on page 39, let me erase all of this. On page 39, step number 6 says journalize the following adjusting journal entries. Okay, well, there's 3 of them, A, B, and C. You're going to do that same exact thing that you did way back when you were making your journal entries for the transactions A through I. Okay, once you've done that, okay, now you have to post the adjusting journal entries, okay, which we've already, in that previous slide, a couple of slides ago, you saw how I posted from the journal to, yep, right here, from the journal to the general ledger accounts. Okay, you're doing the exact same thing here when you're posting these adjusting journal entries, right? Number 8, you're going to calculate the new balances in the general ledger accounts. Okay, every time you make a journal entry and it gets posted, the balance in that general ledger account changes. Well, now that you've posted all of your adjusting journal entries, we're going to create an adjusted trial balance. Okay, that adjusted trial balance looks exactly like this one. Okay, this one here, like this unadjusted trial balance, but the difference is that it's not going to be called an unadjusted trial balance. It's going to be called an adjusted trial balance. Okay, so it looks exactly like this one. The only difference is the heading, what the name of the trial balance is, and the balances in the accounts, because some of those balances have changed. Okay, but the bottom line will still be that your debits will equal your credits. Okay, so for number 8 here, we create an adjusted trial balance. So before I end this video, let me just look to see what's next. Okay, creating the income statement. Okay, before I end this video, let me go over the process again. You start it with a beginning balance, right, in the general ledger accounts. So you made journal entries. Let me just, we made journal entries. We posted them to the general ledger accounts. And then from the general ledger accounts, we created an unadjusted trial balance. Okay. Now that we have the unadjusted trial balance, we have to make sure that those balances are correct. So we have to correct for errors or whatever. And we make adjusting journal entries. Okay. When we make those adjusting journal entries, we're going to post them into the general ledger accounts. And then we create ourselves an adjusted trial balance. All right. So that's where we're at right now with our adjusted trial balance. Right? I jumped ahead real quick here to see that we're creating the income statement. Okay. But just so like in the interim here, we're going to start creating our financial statements. But we're not done with closing out the accounting period. To close out the accounting period, we're going to have to make closing journal entries. We're going to post those to the general ledger accounts. Then we're going to create a post-closing trial balance. And when we do that, we finish making our financial statements. Okay. So right now, where we're at is we are right here in the process where we've created an adjusted trial balance. And so in the next video, we're going to pick up with creating a financial statement.